Good day. My name is James Brent, and I'm here to propose potential solutions to the challenges that Google faces in today's data science platform market. To start, an introduction. The introduction will take you through the current landscape and a background to the data science platform market as it is today. It will also explain the situation that Google, as a data science platform service provider, currently finds itself in, and it'll address the challenges and the key issues facing Coegil today. We'll also talk and touch briefly on scenario planning, which is the matrix and the outcomes which underlie the solution proposal itself. We'll then move on to the proposed solution, which has a plan of action and supporting logic that back up those action points, and some challenges to the proposal, and finally, the conclusion. The data science platform market today is valued between 65 and 300 billion, with a CAGR of 21 to 33%. Its growth drivers are primarily big data, the increasing role of AI and ML in data analytics, AI-driven automation and applications, and increased investment in AI and startups. It extends across all verticals, including BFSI and health, in which the market is very active, but also transportation and logistics, primarily supply chain, retail in e-commerce, government, defense, telecom and IT, media and entertainment, and manufacturing, energy and utilities. It's dominated currently by large enterprise players who I refer to as big tech and include AWS, Google, Microsoft, and IBM. Google finds itself as an intermediary in this market between the producers and the consumers of big data and data science services. Google also finds itself reliant on big tech to provide big data and the foundational infrastructure or the platforms on which these services are built. Google therefore finds itself at risk of disintermediation by big tech and/or its clients. The key issues facing Google today. These include the availability of data and the access to that data, the commoditization of data, and the data science value chain of products and services, the development of client in-house capabilities and their own partnerships with smaller fintechs, other funded competitors offering similar value propositions to Google's, the many emerging companies which are competing for the market share of the established companies, and the development by big tech of their own data science platform capabilities at a lower cost. Given that we understand these are the key issues, and with the current market, we have followed scenario planning and used this to formulate a strategy. Planning is commonly used to formulate strategy in the face of uncertainties. Done correctly, it offers a strategic foresight. In other words, it offers a way forward. Its aim is not to predict the future, but rather to make it possible to imagine multiple futures that allow us to shape and adapt to what we think is going to happen in the years ahead. So, at the end of the day, it doesn't help us to figure out what to think about the future. It helps us to figure out how to think about it. Scenario planning aims to define critical uncertainties. It goes about this by following roughly five phases. First of all, we determine the critical uncertainties that Google faces. We plot these in a 2 by 2 matrix, which will then give rise to 4 potential future scenarios. We then choose the most likely future scenario, and we distill the scenario into a problem statement. Finally, we articulate this problem statement in terms of the one problem or opportunity that Coegil must solve in order to succeed. Here we have Coegil's 2 by 2 matrix. On the left, in the orange boxes, you will see disintermediation. This is one of the two critical uncertainties. On the top in the orange box, continued support from big tech. Coegil's business model is reliant on big tech, and therefore it must have continued support in some manner from big tech. Coegil is an intermediary, so therefore it does have a risk of disintermediation. These are the two critical uncertainties. The four blocks in the middle are the four scenarios that could result. In the first scenario, we have continued support from big tech and client-side disintermediation is happening. In the second scenario, we have the best possible scenario of all, and that is the big tech support is there, and there is no disintermediation happening. In the third scenario, we have the worst of all scenarios. No big tech support, and we're getting disintermediated at the same time. And in the fourth scenario, we have no big tech support, but at the same time, we do not have any disintermediation happening either. What do we think is the most likely scenario? We believe that scenario one is the most likely. Big tech support is there, and client-side disintermediation is happening. What are the outcomes of scenario planning? The critical uncertainties, big tech support, and disintermediation. The most likely scenario, we believe that big tech support will be there and client-side disintermediation is likely to happen. Why do we believe this? Because big tech support should not go away because it's not in their interest. Big tech is reliant. Big tech's core competencies are in data and infrastructure, and not yet in the provision of services. They would like to be in provision of services, and therefore are quite happy to foster relationships or ecosystems such as Google's platform. What is the corresponding problem statement? It is client-side disintermediation at the end of the day. And the one problem opportunity that Coegil must solve is that it must avoid client-side disintermediation by becoming a specialist provider of DSaaS, data science as a service, throughout the entire data science platform value chain and across all verticals, as enabled by one or more big tech JVs or partnerships. We now look at the proposed solution. We consider the problem, which is the client-side disintermediation, through four lenses. The first, the data science ecosystem itself, which is data, infrastructure, and services. Secondly, the existing market share and sustainability. Thirdly, Google's market relevance. And fourth, the risk and cost drivers. The following slides propose a set of actions to address the challenges highlighted in each lens. Lens 1, the data science ecosystem. What is the current situation? Rule-based AI is being replaced with data-based AI. Data is a fundamental ingredient for the delivery of DSaaS products and services. The data science talent pool is scarce and in demand. At the same time, the smaller players' ability to scale and meeting growing demand depends on access to big tech resources. These include the proprietary data sets, infrastructure, talent, and huge R&D budgets. Without this access, fintechs like Coegil will have to rely on in-house talent, build their own infrastructure, and host their own data. They will then effectively be competing with big tech cloud providers. Big tech cloud players are developing their DSaaS platforms and targeting the same markets as Google is. Big tech partnerships are strategic to securing access to the resources required to support the data science value chain. What are the plans? What are the action points that we can take from this lens? Google should secure and strengthen market position. How does it achieve this? It could JV or partner with one or two big techs to secure access to the resources and to build the expertise across the target verticals. A Google JV partnership promises the big tech a faster on ramp to establish services and to a new client base. It's a win win situation for both. Google's market access, commitment to open source, and support for customers using multi cloud is one option for Google. The second action point in this lens, Google should secure venture capital or private equity or angel funding and use this to source talent and to fund further development. Thirdly, Google should seek institutional partnerships in order to protect IP in a very similar manner that Coegil did with Daiwa Securities. The second lens, the existing market share and sustainability of Google's business model. In the current situation, Google faces competition. Other fintechs and technology incumbents are expanding beyond infrastructure and into AI services. The demand for data science services is increasing. The BFSI and health sectors are migrating to cloud services. Financial incumbents cannot afford dedicated AI teams and generally do not contract directly with big tech for cloud services. Therefore, partnership opportunities exist with the FI's data processing service providers themselves, entities such as Fiserv, FIS, and Jack Henry. What are the action points to address this existing market share and sustainability? Google should target growth in the current market. It can do this by acquiring existing market share and strengthening its position through mergers with similar players. It can target the BFSI market by developing relationships and integrating services with existing data processor provider platforms. It can target government services, which often come with negative inherent overheads, but it can overcome these by partnering with an agency specializing in government tenders. Google can expand its partnerships with cloud leaders and develop products with a high potential for non-disintermediation. It could consider targeting the following products and sectors: products which allow for horizontal implementation across several industries, industries most receptive to AI solutions provider, for example, non-tech industries with little tech expertise, and products that require sales expertise, which only Google would be able to provide. The third lens, Google's market relevance. Google's core competence across the entire data science value chain is its key differentiator, but it does not have a wide and deep market penetration. As MasterCard states, there are still no fintech intermediaries with both truly global coverage and a deep service stack. Most are country-specific suppliers or operate only across a couple of countries in a region. There are new techniques, applications, and use cases bringing new complexities. The ability, therefore, to adapt to change is increasingly relevant. What actions can we take towards market relevance? Google should proactively differentiate and maintain its relevance. How does it do this? It can develop expertise in and build next generation capabilities in the DSaaS value chain for horizontal implementation across target markets, BFSI and health as priorities, supplemented by resources from big tech. It can recruit data science skill sets to address resource limitations and market shortages. It can recruit other talent to boost other areas of operational weakness. Sales, distribution, marketing, and CRM could all be strengthened. And it can foster regulatory authority relationships and improve its in house knowledge of data privacy and security. The fourth lens, risk and cost drivers. In the current market, cost efficiencies drive migration to cloud services. Most BFSIs are investing in cloud solutions to decrease costs and risks, and they have the funds to achieve this. There are existing opportunities, including risk and compliance solutions driven by the Sarbanes-Oxley, GDPR, and BAL requirements, and also by the growth in cybersecurity incidents. What are the action points that Google can address? Firstly, target the BFSI market pain points. Use BFSI companies to develop targeted proof of concept solutions which will address cost inefficiency, risk and compliance, and cybersecurity. Then cross sell these matured solutions across to the other target verticals. What are our challenges to the proposed solution, and what are the mitigating factors? The proposal assumes a big tech JV in the short to mid-term. Google can mitigate a failure in this respect through mergers to avoid loss of market share and additional funding to achieve product and skills development. The second challenge would be an actual acquisition by big tech. This, of course, assumes that that Google has failed to secure a big tech JV. If the mitigation that Google achieves above would put it in a strong market position, and the acquisition terms could therefore be favorable. The third challenge is that big tech blocks smaller players. This is possible, but with a low probability. The big tech's core competencies are data and infrastructure services, and not in the provision of the full value chain of services that run on that infrastructure. The fourth challenge is seen as a non proactive or inappropriate reaction to changes in key technology trends. To mitigate against this, Google's strategic management has to remain on high alert to market developments. Lastly, restrictive or unclear regulations on data privacy and security. These will affect all players equally. Those without the resources to sustain the costs of adaptation to regulatory requirements will fail. And this speaks again to the point on remaining on high alert to market developments. What are the potential side effects of this solution as proposed? Targeting more verticals could negate Google's niche expertise factor. JVs and merger and acquisitions could lead to the loss of IP, hidden institutional partnership costs, and the loss of independence. In conclusion, we'll sum up the key aspects of the problem and the key aspects of the solution. The market is dominated by large enterprises who are looking to enter the platform services market. Emerging SMEs add to this competition. The availability of data, not unduly restricted by regulation, and the access to data, not restricted by rights or affordability, is fundamental to delivering the set of products and services required of a cross-vertical data science platform value chain. Building and maintaining the capabilities and components of a data science platform will be prohibitive cost-wise, and with data will be unrealistic. As long as Coegil remains an intermediary, it risks disintermediation in a volatile, albeit high growth market. Key aspects of the solution: Google needs to strategize for the democratization of data and its implications. How does it do this? It secures and strengthens its market position through strategic mergers or acquisitions of existing complementary SME players. It actively recruits talent to address internal resource limits in DSaaS skills, sales, distribution, marketing, and CRM. Actively resourcing, developing, and delivering DSaaS product and service sets for targeted verticals, BFSI, health, government services, while simultaneously seeking partnerships. Partnering with big tech to offer DSaaS across all target verticals. Finally, the problem opportunity statement, which sums up this proposal. Google must avoid client side disintermediation by becoming a specialist provider of data science as a service throughout the data science platform value chain and across all target verticals, as enabled by one or more big tech JVs. Thank you very much for your time.